What's up, everybody? I am Eric Pacheco. I am a realtor here in Tampa, Florida, and I wanted to make a video and discuss credit scores. Credit scores. How do we go from bad to excellent, or how do we go from excellent to bad? Why does that happen? What pitfalls can we avoid? So we got on the phone and we called John Lambert and Carlos Lopez from Geneva Financial to help guide us. And then we got some realtors, Irma Ruiz from Florida Homes and Nicole Salter. And we all got together, had a great meeting, and talked about what clients are going through and how we can best help them and bring them good value when we have our conversations with them, right? So here's a good video of what it takes to get your credit score from bad to excellent and how to avoid those pitfalls from going from excellent to bad. All right, guys, enjoy the video. Any questions, reach out to me. My number is 914-334-5980. You can email me at ericpachecorealtor@gmail.com. Can a divorce impact a credit score?
Well, yeah, absolutely. It depends on, the particulars of the divorce, but, if there's a home involved, things like that, and whether the mortgage is being paid, yeah, it can definitely, impact the credit, and it depends on which party too. Sometimes it can affect one more than others.
Okay.
Mm-hmm.
Yeah, and typically whenever you
something you want to try and pay attention to if you're going through a divorce, but yeah. Is your credit and making sure that you keep things up and current and taken care of if that's possible. So I know that's a tough time.
Yeah, often we see a lot of times whenever you're going through a divorce, one or two of the parties, they're either not paying their credit cards or, for whatever issues that they're having. And that's definitely going to affect their scores down the road. But you want to make sure that you kind of educate them if they're barely starting the divorce. That way they can both be in a good position if they're gonna have to refinance one of the other spouses off that home, so they don't jeopardize their credit.
Okay.
Okay.
Cool.
I have one question also. You come across some buyers that say, well, I buy everything with cash. I can afford it. I buy it with cash. And I'm like, okay, that's great. You buy it with cash, but you need credit. Okay, so how will we, to those type of clients, how do we get them to understand that they need to open up some lines so that they can build credit to get a credit score in order to acquire the things that they want?
Okay, that's a really good question. So typically, I deal with a lot of some of the clients that don't have any credit, or let's say what the spouse does and the other one does not, or they're trying to establish some credit. You got to educate them first of all that you're not going to be able to qualify without any type of credit, right? So typically the easiest thing that I usually do is have them get on a authorized user. Like, for example, like I did with my kids whenever they're 16, 17 years old, I added them to my credit cards as an authorized user, because that way by the time they come 18, 19, 20 years old, they're already going to have established credit, even though they hadn't done anything yet, right? And that's going to help them tremendously. And I always tell that to all my friends to make sure that they put their kids on their credit cards when they're 15, 16 years old. That way, you're going to get them at a good point to where they're going to start establishing their own credit at that point, And that's what I also do with my clients now, is that if one does not have good credit or they don't have any credit, that's how I get them started first. Or what they can also do is get on a secured credit card, like with Wells Fargo or somebody like that, and you can. There's all types of different types of programs that you can do, but first of all is trying to get them educated on why they need to do this.
So what is the time frame that it would take if they were to get a secured credit card for them to actually build enough credit so that their scores can be in a range for at least a minimum of an FHA loan?
If they're doing those types of those secured credit cards, it's going to take them a little bit of while, maybe a couple months, 6 months at the probably at the very least, but they're not going to have sufficient, right? So if they do get as an authorized user, they're basically going to get a fast track on that, because of the fact that, let's say you have a client that has established credit for the last 5-10 years, and they keep a low balance on that credit card, and I have a really low payment and no mortgage, no 30-day lates or anything like that, they're going to get a little bit of a fast track, so that can really expedite that process.
Mhm. Okay, thank you.
So
Absolutely.
just to throw in, Irma, typically we're looking for a client to have 3 trade lines open. That's 3 different types or lines of credit, correct, Carlos?
That's correct.
Yeah. Sometimes we can work with less than that, but that's generally and they're looking for a variety to help, for people to build a credit to be ready to buy a house. A lot of times you want a little bit of variety in your credit. A lot of folks have not bought a home before, so that hasn't been on their credit, but they purchased a car on credit, they have a loan on a vehicle, and then they have, a credit card, maybe 2 credit cards open, or a personal loan, things like that. So it's a little bit of a variety. And it's just time. Sometimes Eric will attest to this. Sometimes it just takes time for that score to come up. But at Geneva, what we do with clients, they come in and they need work on their credit. We don't just kick them to the curb. We actually work with our company that pulls the credit, and they can run an analysis, what we call a rescore analysis, on the credit to see what they need to do exactly to bring their credit up. So we help them make a plan to bring their credit score up so they're ready to buy a home and they're going to get a better interest rate, and they're able to purchase more. So.
Mhm.
And another thing too to keep on that is that with, I think it's Experian or Equifax, they can get an account with them, and they basically upload their bank statements on there and any type of utilities. So let's say your electric bill, your cable bill, or anything like that, those can account, and we can put those in as alternative trade lines, and that will assist them in order to meeting the minimum requirement for your 3 trade lines. So let's just say they have 1 credit card and they don't have any other trade lines. We can add those as long as they haven't been late in the last 12 months, and those are good established trade lines, which will help them get into that home.
Correct. It's Experian, Carlos. Experian Boost.
Experian, yes. Yeah.
And if they're paying their bills on a credit card or something that Experian pulls through the credit report, they'll actually put it in automatically.
Yeah.
Or they can upload, like you said, the bank statements, I believe, to get that going. But that'll instantly bring their score up as well. So it's something that everybody should look at if you're trying to bring your credit up. Now, it's just going to boost it for Experian. It doesn't, there's 3 bureaus out there: TransUnion, Equifax, Experian. Experian's going to boost. As a mortgage lender, we look at 3 credit scores and we take the middle score. So say your Experian score is the lowest, that's going to bring it up potentially with boost, and that's going to bring your middle score up as well. So you can, once again, get a better rate, purchase more of a home.
Awesome.
I have a question. I currently have a client where he has a lot of derogatories on his credit report, and he was not aware of it. And he's working with someone now to try and get it cleaned up, but it seems like that person doesn't respond to him as fast as he would like. I don't know if the communication barrier is just broken somewhere. But how long should it take for credit to be cleared up, approximately, if there's a lot of derogatories on the report that the customer may or may not know about?
It depends on the approach that person's taking. When I work with clients and they have collections, first of all, we run the analysis. The analysis says you need to delete this collection. What that means is we want to get it removed from the credit report. A lot of collection agencies, they don't collect money, they don't make money unless you pay that debt. So they're willing to negotiate with a client and remove that from the report as long as they get a payment or settle for an amount on that debt. So what I always tell clients is don't just pay off your collections. I'm not saying don't pay your collections, but don't just pay off your collections. If you want to help boost your score the right way, then you need to talk to that collection agency. And I do conference calls with them because it's nerve-wracking to do that. But they need to talk to that collection agency and negotiate with them and get it in writing. saying, hey, okay, if you pay this off, Mr. Customer, then we're going to delete this from your credit report. And that way it's like it was never there. So that's your best option, best solution. Some collection agencies won't do it.
Yeah.
So at that point, the customer has to make a decision, do I want to pay it off or not? But if they pay it off to zero, that collection stays on their report, keeps affecting their report for several years. It can take a long time versus, taking the right approach and getting those deleted if you can. So that's something you want to make sure that, your client's talking to this credit person that's helping them make sure they're doing that the right way. Otherwise, yeah, it's going to take quite a while.
Do you find that collection agencies are always willing to work with people, or is it that collection agencies are more willing to work with people during times like COVID as opposed to now when things are starting to pick back up?
I think that they're always willing, because I mean they want to get something out of it at least, and most of them, I mean, there's maybe a couple that I have dealt with that they're just not going to do anything about it, but many of those, they're willing to negotiate. And if you can negotiate, and I've actually been on the phone with them and negotiating with them to try to save them a little bit of money and also get that account cleared up. Even if you get if you get the account cleared up, it's going to help them get that score up, right? Even if they settle for less. But and it's going to save them a lot of money. So for example, I've had a client, I closed him a couple of years ago, and his scores were pretty bad. They were in the very low fives, and but it took a lot of work, conference calls with each one of those collections. He probably had about 10 collections on there, and we went through about 5 of them, and we negotiated and saved them probably about $8,000 in total. And because they were willing to take a lot less than what was owed on that particular collection that they probably paid, pennies on the dollar for. Right. So it does help, and they are willing to work it out. I mean, there might be a couple in there that just won't delete it, but like for example, with their medical accounts now, if they get paid or they get settled, they'll get deleted. It may take a couple months for that process to take place, but they will get deleted. And that's the key. Get it in writing, like John said. Get it in writing, and those will be deleted. And if they're not, you continue. If you get that documentation, we can provide that documentation to our credit department and make sure that those are deleted. And then we can repull credit in 30, 45 days or whatever to ensure that's actually taking place. And keeping the documentation is key.
Gotcha. Okay.
Okay.
I have a question. Currently now I have a client. She wants to do a loan, buy a house. She's from New York. She asked me earlier this morning if I can ask you guys if she can use her daughter's credit score. She's in the high 7s, but she's not on the loan. The daughter is not on the loan. It's the mom. So can the mom use her daughter's credit score?
John, what do you think?
She would have to be on the loan, Eric.
She would have
the daughter would need to be on the loan. And the thing about loans, I know a lot of people have heard the word cosigner before. It doesn't work the same with mortgages, because we look at the lowest middle score. So if mom's credit is not that good and the daughter's is, they may want to consider having the daughter do the loan. That might be the route that they want to take. Or with mom's credit, we probably want to take a look at it and see what it's going to take to bring that up, depending on her time frame, and if we can assist her with that. So, but that would be your 2 best options.
And to jump on there also, that's one good example right there, Eric, that we could look at that credit report and say, okay, based off of her daughter's credit report, as if she wants to add her mom as her authorized user, help build that score up. But first, we need to analyze the mother. What is wrong with your score? What is it that we can do to try to help you to do it on your own, right? Because ultimately it's about education. Because if we can educate them, look, and a lot of people think that their credit is really bad until we pull it, and it's not that bad. There might be just a couple of things that we need to look at to analyze it and see, you just got to do this, change a couple of things here, pay off these collections or whatever, and analyze that. Because if we don't know, we don't know how to help, right? So we need to figure out everything first, review it, and then at that point, give them some advice on what they should do.
I have another
But
question.
there's always options. There's always going to be an option. We just got to figure out what we're working with.
I have one more question. One more question, Nicole.
Shoot.
Another question would be: you speak to a client, their credit score, they say it's 740. That's what it says on Credit Karma, right? So the question is, why is Credit Karma different from what you guys look up? What do you guys look into compared to Credit Karma? What's the difference?
So, Carlos, I'll field that one.
Yeah.
Credit Karma is great. A lot of people have heard of it. A lot of people look at it, and yeah, I get calls all the time that say, "Oh, well, my Credit Karma score says I'm 720," and then we'll pull their credit, and they're actually like a 620. And it's like, what happened? Well, Credit Karma uses Vantage Scoring. Vantage Scoring was created by TransUnion. It's a separate scoring model from FICO. Those are the two that are out there. Right now, mortgage lenders are using FICO, and then it gets really complicated because there's several different versions of FICO. So if you have a credit card and it says, hey, your credit score is this, typically that's your FICO 8 score. Might be going to FICO 9 sometime soon. But for mortgage lenders, we use, right now at least, FICO version 2, 4, and 5. One of those versions for each bureau. So the only way that a consumer can find out what that actual mortgage score is, and it's on my next slide for reference, but they can go to myfico.com, which is the company that creates the scores, the scoring model, and sign in and say it costs some money. I think they charge like 15, 20 bucks. But then you can click on and see what mortgage lenders use, see the score that mortgage lenders use. And that'll tell you almost within a point of what we're going to pull when we pull your credit. Now, something else to let you guys know, we are now able to do what's called a soft pull on your credit. I know a lot of people worry about, oh man, I'm going to have a hard inquiry on my credit. Not sure if I'm ready to buy the house yet. And they're afraid it's going to impact their score, which a hard pull will. It'll affect your score up to 10 points, but typically less than that. And for a year, it stays on for 2 years, affects it for 1. But we can do a soft pull. Soft pull is just an inquiry. It'll pull your score, and it's not going to affect your credit. So that is something we have the capability of doing now. So if people are curious, they want to check their score, they want to know where they're at, so we can start working with them and helping them bring that up if they need to, then we're able to do that.
So question in reference to soft and hard pull. When do you determine which one are you going to do?
It's really up to the customer, and it depends on their time frame. I like to find out, are you ready to buy now? Well, and you think your credit's in good shape? Okay, great. We'll do a hard pull, because we have to do a hard pull to actually do the loan. Mm-hmm. So when they're ready to do the loan, we're going to do a hard pull. But prior to that, if they're just preparing, they're thinking about buying a home, they want to make sure everything's ready, then we can potentially pull a soft pull at that point. So if things change, circumstances change, then it doesn't affect their credit.
Yeah.
Okay, thank you.
Very good. Yeah.
My last question is, what is the lowest possible credit score that you have worked with? Or what is like an absolute no one is going to give you a loan at all, come back in 2 years?
Well, that's a good, really good question. And just to bring back that one point with that one client, I'm telling you, he had about a 520, I think it was. And at that point, this was a couple of years ago, and we could go down to a 580 at that time. I got into a 585. It took about 4 months, but we got him into a 585, and that was right before the pandemic. And but we got it done. So, right around the 620 range is doable for FHA. We can, but what I always want to do is, if I can get that 620 buyer, get his score to 640, it's going to be much better for him or her. And so that's what I usually do. No matter if I'm at a 620, I'm going to do that analytics to see if we can get that score increased to a 640, because it's going to be beneficial for that client. And he may not have to do a lot of things just to get up, 20 points. So that's typically what I usually do. But, it really depends on the market, because things change. Sometimes if the market's doing good, we'll adjust the minimum credit scores, but typically it's going to be no lower than 600. I've seen it again go down to 580, but I always want to get it increased because it's going to be beneficial for that client.
Why would it be beneficial for them? How would it change their payments or their
Well, your rate typically is going to be a little bit better at the 640 on FHA. So I want to make sure that's clear. So on the
your
FHA, it's
interest
a little
rate?
bit. What's that?
Your interest rate?
Your interest rate's going to get a little bit better.
Okay.
From a 640, from a 620 to a 640, right, on an FHA. But if you're doing a conventional loan, you want to be in the 680 to 700 range to get the best pricing possible. But that's kind of what I've seen. What do you see, John?
Yeah, I agree. And if you can get it up even just a little bit more, than they have other options, besides FHA, they can go conventional, a little less on the down payment. They don't have that mortgage insurance, even though it's reduced now for FHA. But yeah, so it just opens up a whole new world, and definitely will help them with their interest rate, which gives them a lower payment, which allows them to buy more house.
But that's a key point right there, John, too. On the FHA, they reduced the mortgage insurance by quite a bit, and that's going to help a lot of people, help them qualify for the homes since they reduced it quite a bit.
Yep, absolutely.
With
Next
the-
question.
Question. I'm sorry.
ahead.
I want to ask. So, question would be the same way that Nicole asked the question: what's the minimum? What's the maximum? Because you got that 740. Sometimes people have an 800 credit score. Is that even more beneficial, 800 than a 740, or is 740 the max for everybody once you hit 740? It don't matter if you hit 800 or 840.
I'm gonna roll 780. Carlos, what do you think?
I have not seen it help. I mean, I haven't seen it in pricing be beneficial. I mean, it's more like bragging rights whenever you're talking with a spouse. I always tell them who has a higher credit score, but I haven't seen it be a huge difference in regards to the pricing from 740 and 850. Doesn't matter. I haven't seen it affect the pricing for that particular client, other than, like I said, bragging rights.
So 740, that's the best you're getting basically.
That's going to be your prime right there. If you can get that 740 mid score, it's going to be better than the 720. It's going to be a little bit on the pricing is where that really affects it. Your rate might be the same, but it depends on if it's going to cost you to get that same rate. It's going to be maybe a little bit difference on that, typically.
So what you're saying is, even if I have the best credit in the world, I'm still going to get charged interest.
Yes. For the time being, yes.
Yep, there's no interest-free loans at this point.
Yeah. So with one last thing in reference to
Go
the
ahead.
credit score and so forth, if you get someone that's very, very close, kind of like teetering, do you offer the rescore to try to get them boosted up so that they are eligible?
We always do. We always do. I know I do. I know John does too.
Mhm.
And the other thing is too, the client has to do the work. All we can do is educate them, but they have to do the work. I mean, I've had clients that really just work hard and get it done. And I've had clients that every year they'll call me, hey, I've been working on my credit, and I pull credit, and it's worse than it was the year before. But it's really true. And I look at that email, and whenever I have my files and my clients, I look at that and I look, I remember when I sent this back to you in 2018, and you're in a worse position right now. And don't buy a car before you're looking to buy a house, because now you have a debt to income issue. So yes.
Yeah,
Always we try to help them out as much as possible, and doing the rescore again, as long as they're going to really put in the work to do that, because it does get a little bit pricey whenever we do that, but we want to get them into that home and get them the best rate possible. But education is the key and then we'll also do that is go over the credit report and look, this is what I see, this is what I think you should be doing, and then hopefully they take action.
Here, I got one. So this is me. I use a credit card and I pay it off 100% right away within 2 weeks. Is that the right way to go, or should I leave a balance on my card?
John?
And I know Eric, we've talked about this before, but you do want to show activity on your card. So you want to keep a small balance on your card. I'll tell you, and Carlos, you can back me up, but on the rescore analysis that we run, almost every single time there's a balance on a card that needs to go down, the recommendation is to bring it down to $10.
Yeah.
$10. So buy lunch. I don't even, you can't even buy lunch for $10 now. But just you want to keep it around that, because a big part of your credit score is your credit utilization. And that's basically how much do you have charged on your card versus how much your limit is. So you want to keep that as low as possible. You'll read a lot of stuff online that says keep it at 30% or less. You want to keep it even lower than that, in my opinion, from what I've seen doing mortgages, working with people.
The other good thing is whenever you are making those payments, and let's say you're going to pay it off, or you're going to use make a big change to that, whenever you're doing that, what I usually tell my clients is about maybe a week before your payment is going to be reported towards the credit bureaus, is pay it down during that time. That way, whenever they report it, it's going to go off of the lower balance. It's not going to be the balance that, let's say you make the payment during the middle of the month, and it's going to still show the previous balance whenever they report. So what I always try to tell them is right before you're going to pull credit, make sure you get those balances down right before they report to the credit bureaus. And it's typically, like I said, about 7 days. If your payment is due on the 5th, just pay it on the 1st. And then that way, don't use that card until after the fact, after we pull credit.
Okay. All right, guys, we got 8.5 minutes. John, you're free to go freestyle here, brother. What you got to do your thing.
Well, I mean, everybody's heard this and they know it, but you really have to drive it home. You know, when I turned 18, I got a Dillard's card, and I had an $800 credit limit. I had no idea what credit was. I was like, oh wow, I can go buy stuff. So I did. Didn't know I had to pay it back. So that started me off on a really bad path, and it took literally years, a lot of my life, to understand, all right, this is how I need to manage my credit. So I've been there. I've had to call collection agencies and negotiate with them and get that deleted off my report at different times. My credit's great now. I take care of it, but it was a hard lesson. It's very easy for folks, and I think everybody that does listen to this video can probably relate, to bury your head in the sand when you have too much debt and not enough money, and you're putting it on the cards, and it's just easier to ignore it than to worry about paying for it and, you know, fixing your credit, keeping your credit where it needs to be. So you have to buckle down. If you have a lot of debt, you have a lot of credit cards with a lot of payments on it, focus on the smallest one. This is what I did. And you can do whatever you want, but focus on the smallest one, pay that one off, and then focus on the next one, pay that one off, and work your way through until all of them are done. It may take who knows how long, you know, years. But if you do that, make a plan, sacrifice that Starbucks or whatever else you like to go do that you can live without, and put that towards paying off that card, you're going to put yourself in a better position, you know, and we're talking about home buying, but this is just life in general. You know, it's going to put you in a better position if you need something, if you have an emergency, things like that. You're going to have that money available to take care of those things. So that's my freestyle.
It's a nice freestyle. I like it.
Thank you for sharing that. If I could say, I had back about maybe 8 years ago, I had a wallet full of credit cards, store cards, everything. I felt so cool. I could go to any store and buy stuff, right? And I would just pay the minimum. But I did learn the lesson, like, damn, this was all coming at once. Once the money stopped flowing, I couldn't make these payments anymore. And it was starting to affect the credit cards. It was starting to affect me personally. I couldn't sleep. I was stressed out. And it hurts. It hurts me, man. I learned a real hard lesson. I only got 2 credit cards now. And I also pay attention. I keep them below $10. I have fun with them now. I enjoy it. I don't use it unless I know I'm going to pay it off. And it's more like a game now because I know how to play it. So, but before, I lost big time, man. Big time.
Here's the other thing
That's
too.
funny. I
touch
was in
on
the
that real
same
quick,
boat as
Eric.
Eric. Oh, I'm sorry. Were you
No,
talking
go
about?
ahead.
I'm sorry.
I was just gonna say real quick, Nicole, you said you're down to 2 credit cards. So if you have credit cards open and they've been open for a while, unless you absolutely have to, pay them off and keep them open. Don't close your credit cards, because one of the things they look at is how long you've had established credit.
Mhm.
So it's, if you got 20 credit cards, yeah, you got too many. But in the short term, at least until your score goes up, keep them open. And then if you need to close some that are more recent, not your oldest cards. So
Mhm.
go ahead, Nicole. Sorry, didn't mean to cut you off.
I was the same way as Eric when I was in college. They were like, here, sign up for this, sign up for that,
Yeah.
right in front of the door. Before you even knew what classes you were in, the credit card companies were there. Now,
Oh,
my wallet is full of discount cards.
yeah.
Every store I go to, here's my card, give me my points. I'll be back
Yeah.
for my $5 later.
Yeah. I had a JC Penney card for school clothes. I had a PC Richard for TV. I had a Best Buy. I had a Toys R Us for toys. I had all Home Depot. I had
Oh
all
my
these
goodness.
cards, and I felt so cool. But it was all fake money. It was all a trap, and you definitely have to pay attention. And it's good to get them, but don't use them. Don't use them.
Exactly.
Credit and say yes, I'll use them. I'll stash it away. I'll open it, but I won't use it, because once you use it, and you stop playing this game. If you keep using all these cards, and if you, God forbid, you lose your job and there's no income coming, that's when you get hurt.
They want their money.
That's right. Everybody want their money.
Yeah.
Oh,
And
for sure.
one thing that people, when they get the cards, they don't look at them. When you're talking about Visa cards and you're talking about store cards, the interest rates are so much higher. People never look at the different terms of the card. So if you're going to get a credit card, look at the terms and see which one's is going to serve you best. Like Nicole said, you want rewards. Give me my benefits. Give me
Yes.
my rewards.
Get
You know,
rewards
you want to
or
reward it for using the
0%
card.
interest for 20 months.
Yep.
Right.
Yes.
And the cash back, people think cash back. You're paying much more on those cash back cards. So people read the fine print. There's nothing free.
Yeah.
That's
Do your
something
research on those
to
for
keep
sure.
down, too.
Hey, so I put some resources up for everybody. Annualcreditreport.com. Right now, you can pull your credit report once a week. So if you're a consumer, you can go there, pull all 3 reports. It doesn't give you your scores, but it does tell you what's on each credit report. And each credit report is typically a little different, because some companies will report to Equifax and won't report to TransUnion, and vice versa. So you want to look at all 3 reports, see what's on there, make sure everything's correct. A lot of times we'll run into, collection agencies that are reporting mistakes. They report the date wrong, which affects your credit. So those are things that you can correct on your credit report and potentially bring your score up as well. myfico.com, that's where you can go to get your actual mortgage score. Experian.com, sign up for the boost. TransUnion gives you a couple free things, but they want to charge for a subscription